Have you ever wondered how Bitcoin, the world's first cryptocurrency, came to be? The story begins in 2008, a year that would forever change the financial world. Amid the chaos of a global financial crisis, an anonymous figure, or perhaps a group known as Satoshi Nakamoto, released a document that would alter the course of financial history. This was the Bitcoin Whitepaper, a 9-page document titled Bitcoin, a peer-to-peer electronic cash system. It introduced the concept of a new kind of money. But this was no ordinary currency. This was a digital currency, one that didn't rely on banks or governments. Bitcoin was designed to be decentralized, its value and security maintained by a network of computers across the globe. This was a radical departure from the traditional financial system, a system that had just demonstrated its fallibility in the most dramatic way possible. You see, the birth of Bitcoin wasn't just a technological innovation. It was a response, a reaction to a world where banks could collapse and governments could print money at will. The financial crisis of 2008 had shaken trust in these institutions, and Bitcoin was an attempt to create a system that didn't need that trust. It was a system where security and value didn't come from a central authority, but from the network itself. And there was another revolutionary aspect to Bitcoin. It was open source, meaning anyone could look at the code, modify it, and create their own versions. This wasn't just a new kind of money, it was a new way of thinking about money. It was a vision of a financial system that was transparent, secure, and free from control by any single entity. So with a vision and a white paper, Bitcoin was born, but how does it work? At the heart of Bitcoin lies a complex algorithm known as SHA-256. This is secure hash algorithm 256-bit, a member of the SHA-2 cryptographic hash functions designed by the NSA. This algorithm is fundamental to the operation of Bitcoin. But what exactly does it do and why is it so vital? Well, SHA-256 is responsible for creating a unique digital fingerprint of a dataset. When applied to a dataset, even a minor change results in a completely different hash. This property is crucial in maintaining the integrity of transactions on the Bitcoin network. When a Bitcoin transaction is made, it must be added to the blockchain, the public ledger of all Bitcoin transactions. But before it can be added, it must be verified. This is where SHA-256 and miners come into play. Bitcoin miners are essentially auditors. They verify the legitimacy of Bitcoin transactions. Their job is to ensure that transactions are not fraudulent and that the same Bitcoin is not spent twice. They do this by solving complex mathematical problems using the SHA-256 algorithm. When a miner solves the problem, they add the verified transaction to the blockchain. This process is known as mining because it's akin to digging for gold or diamonds. Instead of physically mining with a pick and shovel, they're mining with computing power. The miner who solves the problem first gets to place the next block on the blockchain and claim the reward. The reward is a certain number of bitcoins. This reward is the incentive for miners to continue verifying transactions and securing the network. SHA-256 is not only crucial for transaction verification, but also for generating Bitcoin addresses. A Bitcoin address is created by applying the SHA-256 algorithm to the public part of a public-private key pair. So in a nutshell, the SHA-256 algorithm is the bedrock of the Bitcoin network. It maintains the integrity of transactions, generates Bitcoin addresses, and incentivizes miners to secure the network and verify transactions. Now that we understand how Bitcoin functions, let's delve into its journey over the years. Like a roller coaster ride, Bitcoin's journey has been full of highs and lows. In its relatively short existence, this digital asset has seen a dramatic series of ascents and descents, akin to the most thrilling amusement park attractions. Let's take a trip down memory lane. In the early days, Bitcoin was worth mere pennies. Fast forward a few years to 2017, and Bitcoin was reaching dizzying heights, peaking at a value close to $20,000. But as with any roller coaster, what goes up must come down. By the end of 2018, Bitcoin had plummeted back to the $3,000 range. But why such volatility? Bitcoin's cycles of bull runs and bear markets are influenced by a variety of factors. Market sentiment, for instance, plays a significant role. As Bitcoin gains media attention and public interest, the price tends to surge. But when negative news hits, such as regulatory changes or security breaches, the sentiment can quickly turn, leading to sharp declines. Regulatory news in particular has been a significant driver of Bitcoin's price. Announcements of potential crackdowns on cryptocurrency by various governments can cause precipitous drops. Conversely, news of regulatory acceptance can fuel bull runs. Technological advancements also play a part in Bitcoin's price movements. Innovations that enhance the functionality and usability of Bitcoin can increase its value and drive up the price. These advancements can range from improvements in Bitcoin's underlying technology to the development of new services and platforms that make Bitcoin more accessible to the public. And let's not forget about the role of market manipulation. Whales, or large holders of Bitcoin, can significantly influence the price by buying or selling large amounts. This can lead to short-term price swings that can be quite dramatic. Despite these market cycles, Bitcoin's value proposition remains strong. Its decentralized nature, limited supply, and potential as a hedge against inflation continue to make it an attractive investment for many. Like a roller coaster ride, the journey is thrilling, and despite the ups and downs, the overall trajectory of Bitcoin continues to be upwards. What makes Bitcoin valuable in the eyes of its supporters? The value of Bitcoin is multifaceted, with its allure stemming from several unique properties. First and foremost is its scarcity. Bitcoin's supply is capped at 21 million coins. This limit is hardwired into the Bitcoin protocol, making it immune to the whims of human intervention. Unlike traditional fiat currencies, which can be printed at will by central banks, Bitcoin's scarcity is unchangeable, making it a digital equivalent to gold. Another key factor to Bitcoin's value is its decentralization. Bitcoin operates on a network that is not controlled by any single entity or government. This means that Bitcoin is immune to censorship, political interference, or manipulation from central authorities. In a world where trust in institutions is wavering, this decentralized nature of Bitcoin offers a refreshing alternative. Then we come to Bitcoin's potential as a hedge against inflation. With governments around the globe printing money at record rates to combat economic downturns, many fear that inflation is inevitable. Bitcoin, with its predictable and limited supply, offers a potential safeguard against the eroding value of fiat currencies. This has led to an increasing number of institutions and individuals alike to consider Bitcoin as a digital gold or a store of value. Over the years, these factors have contributed to Bitcoin's increasing adoption. More and more businesses are accepting Bitcoin as a form of payment, while investors are starting to see it as a viable asset class. This increasing demand, coupled with its limited supply, has resulted in Bitcoin's value soaring to new heights. But the value of Bitcoin isn't just about its price, it's about the idea it represents. A financial system that is open, transparent, and free from central control. It's about the potential for financial inclusion, for a world where anyone with an internet connection can access a global monetary system. As we look to the future, one can't help but wonder what's next for Bitcoin. As we gaze into the crystal ball, what could the future potentially hold for Bitcoin? The future of Bitcoin is as unpredictable as it is exciting. It's a digital Wild West, a frontier of finance where anything seems possible. But let's explore some of the potential scenarios, shall we? For starters, wider adoption of Bitcoin is likely on the horizon. As more businesses accept Bitcoin as a legitimate form of payment, more people will start using it, which could lead to a significant increase in its value. We're already seeing this trend with major companies like Tesla and Microsoft accepting Bitcoin. This could be the beginning of a new era where Bitcoin isn't just an investment but a mainstream currency. But with wider adoption comes regulatory challenges. Governments around the world are grappling with how to regulate cryptocurrencies, and their decisions could have significant impacts on Bitcoin's future. Some countries may embrace it, while others could ban it outright. The regulatory landscape is uncertain, and this uncertainty could lead to volatility in the Bitcoin market. Technological advancements could also play a huge role in Bitcoin's future. Improvements in blockchain technology could make Bitcoin transactions faster, cheaper, and more secure. This could make Bitcoin more appealing to both individuals and businesses, potentially leading to even wider adoption. And let's not forget about potential use cases. Bitcoin's underlying technology, the blockchain, has applications far beyond just currency. It could be used for everything from smart contracts to supply chain tracking. As more of these applications are developed and adopted, it could drive further demand for Bitcoin. However, it's important to remember that the future of Bitcoin is uncertain. Its value is incredibly volatile, and it's subject to a variety of external influences. Bitcoin's future could be bright or it could be bleak. Only time will tell. Whatever the future holds, one thing is clear. Bitcoin has forever altered the landscape of finance, and its story continues to unfold.